Hey guys, what's going on? I thought I'd do a quick video about Brian Bottarelli's Catalyst Cash Outs Live. We had the very first trade yesterday, and so it was held overnight to today. So I thought I'd give sort of an overview of the trade. It was a bit of a wash, but it wasn't bad, all things considered. Some people made money, some people lost money, some people broke even. It's kind of a wash, like I said, it's probably the best word to explain it. But it'd be interesting just to kind of show you what it was, what the trade actually involved, and why maybe things didn't go quite as well as we'd hoped on this first trade. So it's interesting because you can't really judge a service by a trade, but you always want to get, off to a good start. And this was kind of a washout, is the best word for it. I made a little bit, a few percent on it. I know a couple other people made a few percent as well. I think one guy maybe even made like 10%, but most people were struggling with this, especially if they were new to their brokerages or platforms, or just to handling two options trades simultaneously, especially given how the trade plan was altered throughout the day based on how the trade was going. So it was definitely an interesting trade. I think it's worth considering and looking through. Before I get started, this is my full review, and this is where I'm going to keep this track record. It's hard for me to say exactly what, the give a track record of the trades. I can put what Brian got, which was a positive win, small but positive. I can put what I got, which was small and positive. But for a lot of people watching this, they might be sitting there going, "Oh yeah, right, whatever. Like I made a loss on that trade." But I'd urge those people to look through the trade and think, what could I have done better? What should have been more alert for these particular trades, because this is new to all of us at this point. These trades are not as passive as perhaps maybe the name suggests, where you just buy and hold overnight. You don't let them expire worthless generally, from what I'm seeing. At least this first example, we certainly didn't. Anyway, this is the review. I'll leave a link in the description below. You can go through and learn all about it, including the interview that I had with Brian, all about this new service. And so the idea is pretty simple. You buy a call and a put for either the next day or a couple of days out, for the same expiration, forming a strangle on these trades. So yeah, take a look through here. You'll see everything that basically you need to know. Basically, every Tuesday at 2 p.m. Eastern Time, they go live, and it was an interesting live stream. It had Brian and Karim and Ryan from Monument Traders Alliance all on here. I watched a bit of it, and then I looked at the actual trade alerts, which you get promptly via email and also via the app. So I just use email. That's usually just what I've been using. So I thought it worked quite well today. I was able to get in and out at roughly the same time as those guys, and basically, this was a very interesting learning experience for me. Now, what we did today was to actually play not JOLTS, which is talked about a lot here. This is the best backtested economic event, this job openings and labour turnover survey. That only happens once a month, so we were playing actually a different economic event this week. So if I go over to my little PowerPoint here, it's called Catalyst Cash Outs Live. Here are screenshots from the dashboard in Catalyst Cash Outs Live. So I'll just kind of zoom in and show you. So this was the trade alert. It was given yesterday. So this is going to be like an overnight trade. And so you can see it says new Catalyst Cash Outs trade 49. And so it's basically always on SPY, always the same. We're playing the market. And it's a strangle basically based on CPI, which was this morning, so at the time it's tomorrow because it's an overnight trade, and PPI reports Thursday. Now this is interesting because it's two catalysts and it's not 0 DTE. They were recommending buying for Friday, which is actually 3 days out, right? So the action plan is buy the SPY April 518 calls expiring this Friday, simultaneously buy the SPY April 516 puts expiring this Friday. Total entry should be about $6. That's what I got, which is $600 per strangle. So if you want to do more than that, you just keep doing more and more on each side. And the profit plan was to try and get a plus 50% gain and set the call put protective stop loss at minus 25. This is good protective trading. Losing 25% on an options trade like this is not bad. That's good risk management in my opinion. So I was pretty happy to see that. Maybe a little tight, and we got down towards that at one point, which was interesting. I didn't stop out, thankfully. I don't think we quite hit minus 25%, at least I didn't. I think I got down to minus 17% at one point, so I was really happy to eke out a profit from this overall as the day went on. So Let's have a look. If neither profit or loss target is achieved by Friday, then simply close the position. The problem with this is theta decay by the time it gets to Friday, so I wanted to close this today. And so I was really excited when I saw the market. Basically, the market tanked overnight based on this potential result. So this is, I'll try and zoom in here. This circle here is where they alerted the trade, and the market was trading around 517. And this overnight drop was fantastic. So we were all looking pre-market and we're seeing this huge drop, and we're like, great. These puts, and I've drawn the red line in here, which is 516. Those are the strike prices for the puts. So we went well into the money on the puts. So we're like, wow, these puts are going to be up 400% or something. This is fantastic. And okay, the calls are going to be down a lot because this is the call price up here at 518. But that's the idea with the strangle, that this gain when you drop down to here is going to be much larger than the loss from the calls. But because we're 3 days out, it didn't really happen like that. So what happened is we actually opened up a net small loss, very small loss, like minus $50 or something, which was very surprising because we're all sitting there rubbing our hands going, this is going to be amazing. We're going to be up like 400%. This is fantastic. And what happened is I think we got IV crush. I think that basically the implied volatility, which affects the premiums, was basically just like Lord. So the puts never actually went up more than 140%. Now that might sound amazing. So the puts, when I sold them, I think I sold them down here, were like 140%, which is amazing. The problem is the calls were still really getting hit. So we actually sold the calls a little later. So we didn't take everything here. We actually waited a bit, and that was the difference between here and here. This is a 1 minute chart, so not that long. And basically we're able to get out for a profit by legging out. So basically we sold the puts, and the time to sell on the puts really well down here for 140% on them, and then the calls wait for a bounce after the FOMC. Didn't get much of a bounce. FOMC normally, if it just gone flying up here, would have made a decent profit, but as it was, we got a bit of a bounce, kind of flopped, and so Brian basically put out a notice saying, hey, sell the calls now as well. I don't think it's worth the risk holding into tomorrow's economic events either, because he wants this trade to go well, and he got out for a small profit, and so did I, so did a couple of people I know, but there was a few people that took some losses because they weren't able to watch it as closely, and because I don't think people were expecting this to be this style where you have to sometimes leg out, right? We thought we'd just hold it and just kind of, sell, and then that would be it. And so people didn't get the notifications fast enough or whatnot. Anyway, it was kind of cool because they kept us updated really well. So you can see on the right was one of the updates that were sent out. So it basically said, here's the 516, 518 call updates where things stand. Because people were kind of freaking out when it opened. It was flat to slightly down. And basically it was saying a hotter than expected inflation report is triggering a market pullback. However, our SPY trade is currently priced right around break even. It was down a little bit. It's down like $50, which people seem to be freaking out about, but to me it seems like a small amount. This is perfectly fine because of two reasons. First, we have all day to see if the market pullback extends even lower. It did actually do that a little bit. If so, this could move the entire position into the profit zone. That's what happened. Second, we have the PPI report coming tomorrow, which could act as a further market directional trigger. So for now, hold maintain both SPY positions. Your profit targets are set, so as you stop. From here, we simply sit back and see how the markets react to the economic reports. But it seems like what happened as time went on, they decided that maybe what we're going to do is escape this one, because it really wasn't trading well. Like, it just, when things don't trade quite well, like there's something a bit weird, like the IV's not acting right, or theta's really burning your positions. And so they decided to reissue like some extra alerts in the afternoon. So instead of holding through all the way to like Thursday with all the different economic events with the FOMC and everything, decided the best case here was to actually sell the SPY puts, and that's what I showed you on my plot here. So we sold the puts here for like 140%, which was awesome. Now by doing that, basically protected the whole position, right? Because then you're limiting how much you could possibly lose. And that's what they say here. So we're going into the PPI report tomorrow morning. We're going to adjust our cash outs trade. This move will take the majority of our risk off the table. So I think they were getting a bit freaked out at this point because this is the first trade in a new service, and they don't want all these people getting hit by a big move tomorrow, which makes the position worthless or something. All $600 put in, or whatever multiple of 600 you use, to be just destroyed. So this is a very sensible risk management step, in my opinion. I really do think they did a good job here. Some people might disagree and say they're altering their trade plan, but I think you have to when contracts aren't moving right, or economic events are not quite working out the way you hoped. It's good to manage your risks so that you take small losses rather than take huge losses and you stay in the game. So while also positioning as a way that could pay off the markets if they do rally. So this is when they're saying, let's sell the puts now. They're up big. Let's just sell them. Here's the maneuver. Action plan. Sell your SPY 516 puts expiring for Friday for the best prices available. Good for the day. Hold your SPY April 518 calls expiring this Friday. Note, as Karim and I stressed in the live event yesterday, this trade was just to get your feet wet and to get familiar and comfortable with trading this methodology. By selling the SPY puts, we'll take around $4.85 of premium off the table and put that into our pockets. This will leave around $1 of risk premium play, which is represented by the SPY calls. If the PPI triggers, which is actually tomorrow, so we were out of this position before PPI, a rally tomorrow will be well positioned to profit. Or if the PPI triggers another market sell-off, then we'll be able to close the calls. However, a majority of our risk was reduced by today's put sell, so I do think this was quite smart, thus making your total at-risk capital very manageable. I think for some reason in my communities and stuff, people seem to be freaking out more than I felt was justified about this, or maybe I was reading the atmosphere in the room wrong, but it seemed to be like a very sensible way to manage the risk. And I'd rather see this than just like, okay, hold it until everything blows up, which a lot of services do. So I was really excited to see the risk management by these guys on this trade. And so it wasn't long after that, though, that about an hour where I basically said, hey, we're getting a small bounce here from the FOMC. So he says, after a well-timed sell that maximized our SPY put premiums, so that was the well-timed sell here to maximize the SPY premium, the put premiums, then up here we're going to sell our calls and just get out of this and make sure that we don't make a mess of this trade. And I don't blame them, because it's the first one, and I think they want to make sure that people don't lose their butts on this. And some people took a small loss, but most people would have broken even or made a small profit, I think. So after well-timed sell that maximized our SPY put premiums, the Fed minutes just released are triggering a semi-upside move. This intraday bounce has moved our SPY calls higher, and thus moved our entire cash-out trade, so the whole trade as a whole. So if you take the calls and the puts, are now in the profit zone. So if you paid $6, you're now above $6 in total premium for this trade. And it was only like, a little bit, a few percent, but it was definitely in the profit for a little bit. You had to be kind of quick though, because you can see that with a small move, this thing sold off again. If you hadn't quite nailed here, you'd have maybe not got quite as much for your puts. If you'd hit up here, for example, you wouldn't have got as much for your puts, and you may have ended up break even or a small loss. So definitely a weird trade, and I wasn't quite expecting this. I don't know if we'll see this going forward, or if this is just like a one-off weird start to the whole thing, but it was pretty interesting. I think they took a vote and said, hey, let's get out of this trade while we're not like at a big loss, because it was down 20%, I'd say. It was close to stopping out. And I think a few people that were a bit nervous maybe did stop out early, and they're probably kind of kicking themselves now, because sometimes it's worth giving these trades a bit of room, especially if you're new. 20% move on options like this, where you're playing crazy, like this type of crazy trade, like on economic events, like 20% is not a big move. Like, it's not. And so 25% stop is actually pretty tight. So yeah. Anyway, so they closed the whole position out at this point. So within an hour, they'd closed the position. They lagged out over the space of this 1 hour from, this is in Central Time, but yeah. And of course, congratulations on your first cash out winner. This was a smaller one, but I'm confident there'll be higher ones coming in your future. I agree. I think there was something really weird here. I talked to a guy in the group, and he had basically to say that he thinks it was to do with the IV was mostly flat and began to drop after the Fed minutes was released, which caused data to have a bigger drag effect. Sometimes you just get weird stuff, like after earnings, you'll get like an IV crush and things. So sometimes you're going to have strange trades, and I'm hoping that's what happened here. So yeah, definitely check it out though. I still recommend this service. From the very first trade, seeing the way that they manage the risk is actually really helpful. And so, because anybody can make money, but like it's people when trades are going wrong, and if this one is an example of one that goes wrong, that's exciting because this is not really a loss. This is a small profit or a small loss for most people. And I think that type of trade you can have confidence in, right? You can be like, I'm not going to actually lose that much money if this goes wrong. And this did seem to kind of go wrong. so I'm excited about that. And like I said, I made some money, and my friend Lance, our investing teacher, he also did the same. He followed their alerts. So he says, I followed it as close as possible to the alerts. It should have been a bit higher. The market down 1%, VIX up 6%. You would think that should be a decent profit. That's what the weird thing is here, that the market was down, and yet we struggled to make a profit. So he made 4.6. I think I made about 3%. So we both made a little bit of money, but I know a lot of people in the room that are on the unofficial Discord room do actually feel like they lost some money on that, or they were barely making a profit. So not a great start, not a stellar start to this Catalyst Cash Outs live, but that doesn't change my recommendation on this. I think, if anything, it actually makes me more comfortable in how these guys manage their risk. The only problem here is they may be more on-hands management than maybe we were led to believe. Not intentionally, but we were led to believe that this might be more of a set it and forget it type of thing. This I do feel will be not the norm though. I think we'll see more consistent moves where you don't have to leg out so much, where you can just close it for a profit because the market moves and the strangle does its thing and works properly. The strangle just seemed broken this morning, which is unfortunate because on a move down like this, I was really hoping to see a better move. So anyway, congratulations to people that managed to get out of this break even or for a small profit. For people that took a loss, it shouldn't have been a big loss. If you'd at least been available to be like at your phone or on your computer, you shouldn't have been like destroyed by this trade by any stretch of the imagination. So that's good. So if this is an example of one that doesn't really work, I'm excited to see ones that work. So definitely come and check out my full review. I'm going to put this video on here, so I'm going to start a track record section on here. Again, I'll leave a link to this whole thing in the description below. And so they have all their back-tested results, but this was one of the first ones that basically was like a real trade. And so I'll put roughly what they got and try and keep a record. And you can see sometimes like for these catalyst trades, they do hit like a minus 8%, minus 30%, or plus 1.99%. So just because we've taken one trade and it's not worked out perfectly for everybody, doesn't mean that the rest of the trades won't work well. So I will try and keep a track record in here. I think I have to actually make a whole new section. So it'll be down the bottom here. I'll start a track record, and I'll put some comments in this type of video when I do the weekly review of the trades, and hopefully that will help you guys. Yeah, so make sure you check the description below, and I will talk to you guys soon.